This is Don Kaufman, and you are watching the TheoTrade evening video, May 31st, 2023. All right, we've got just about 28 minutes left inside of the cash session on this Wednesday afternoon. Look at that. The SPOOs are actually off some 20 handles. But what is on everybody's mind right now? Yeah, you better believe it. Some signs of weakness in big tech. Tell me it isn't so. Is big tech beginning to break? Look, we're going to spend this evening's video looking quite in detail at some of the options order flow to see like, all right, we seeing any, magnificent shifts of order flow that are saying like this is it, like this is going to be a huge bearish break. And I'm going to tell you right now, you're going to be rather surprised, if you will, at specifically what we're going to look at. So let us first and foremost look at the S&Ps, kind of where we're trading right now. I mean, look, the entire trading session has been met with some sell side activity. And then, of course, late in the day, look at this. They're actually buying back the marketplace. We've actually rallied back up. Nevertheless, we are still a bit shy of the oh so critical, and people have been talking about it for weeks, the 4211. All right, so we're ending up just shy of that 4211. I wouldn't be surprised to see that make an appearance once again. But one of the critical spots that you want to watch inside of the tape, and again, this is specific to the S&Ps, right? So this is the SPOOs, /ES, the futures contract. Yeah, look, this 41.75 held tremendous weight in previous weeks of trade. It's a big area of congestion, and effectively staying above it is bullish for the time being. And I say bullish to the extent of we'll just rally back up into the 42.11. But mind you, very, very critical, a break somewhere right again in the neighborhood of this 41, and I want to make it very clear that 41.75, somewhere a break below that, market becomes a bit of a bottomless pit, and that's when they'll say, hey, see you at 41.06. So again, a break below 41.75 becomes a bit dire for the markets. And again, don't listen to me, just look at some of the price action in a few of the previous weeks, and you will see, again, kind of heavy congestion at this particular level. In fact, it's worth me drawing a line right across your screen. This is an area, as I said, it was a break below it that has actually seen really substantial, moves to the downside almost every time. And again, rallies actually stopped here at that 41.75. So there's no question. It's not like a gravity point per se, but it's a very critical area inside of the S&Ps. Now, one of the things that's interesting inside of today's trade is some really weak sectors. And you look at the financials, they're getting beaten up by the tune of 1%. You look at the energy sector, it's beaten up by the tune of 1.75%. Look, we can go through sector after sector. What I found interesting though today is some of the usual suspects are kind of getting beaten up. We are actually seeing, though, a rotation right now into a couple of areas. Like no one has wanted to touch Walmart, for basically like the last 3 weeks. Okay, there's a huge bid under that. Costco, just to make a quick point, no one has touched Costco since, all right, off of its earnings numbers, exploded to the upside, but there's a little bit of follow through in here. This actually could be opportunistic. Again, if you take a look, Intel is actually news driven, nevertheless, significantly higher. But as I was looking at the advanced decline line today, I was rather surprised because, again, a couple of areas that just no one's wanted to touch lately have a bit of a bid under them. Nevertheless, financials, and the energy sector literally knocked the legs out of the marketplace. So what are you really left with? Big tech. And big tech today, well, obviously we're going to look at a little bit of Tesla, which is basically unchanged. But there's no question some decent sell side activity specific to Nvidia. And if you look at the S&Ps and you wanted to point a finger towards a single underlying that caused, the incredible momentum to the upside. Of course, what I'm referencing, that incredible momentum is right here. If there's one underlying to look at, it's clearly Nvidia. And the reason I said, like, hey, we're going to take a very detailed look at it, because I kind of asked the question, is big tech, beginning to break? Well, looking here in the chart, I just don't think you see anything. Looking even at an intraday, again, who cares? Whatever. It's down, 4%. Newsflash, that's after, multiple days of humongous gains over here. Maybe this is a key reversal, maybe it's not. But I am going to tell you a little bit by looking at the options order flow. First of all, if you are on the Thinkorswim platform, I'm going to go ahead and close up this left side bar and open up option statistics. A lot can actually be learned from looking at option stats right down here. First of all, a lot of people, they just look blindly at the number of calls traded and the number of puts traded. But that doesn't really help that much because you don't have anything to go off of. And by that, I mean, like, so what if 700,000 calls traded? And let's say 700,000 calls traded and only, 200,000 puts traded. You would think that's very bullish. But again, when I say you don't have anything to go on, you don't know what yesterday's volume is, unless, of course, you look at it on a day-to-day basis. So, in fact, you look over here at what's called the sizzle index. The sizzle index is, and again, I want to be very specific with this, it's today's option volume, okay, versus the previous 5 trading days option volume. So, and I'll just give you a quick example on this front. If the sizzle index, which is exactly on the call, basically sitting at 1, if the sizzle is at 1, what does that imply? It says, well, the option order flow today is the exact same. Effectively, it has been versus the previous 5 days. It's right in line with what it has been. And I mean, that's a lot of calls trading. Interestingly enough, the put sizzle, it's also rather normal. So then from there, okay, and again, the reason I wanted to bring this up is you see this big break of the stock to the downside. You're like, this is it, people. Okay, this is the one we're waiting for. And the sizzle index says, no, it's not. The sizzle index says, this is about as boring as a day possibly gets. It's doing normal option order flow. Like you would expect if stock was going to break down, maybe you would see heavy put activity. Because if you have heavy put activity, especially put buyers, okay, what that's going to do is if you're buying puts, the market making firms are actually selling you the puts. To sell puts would have a lot of positive delta. To offset that positive delta, what does a market making firm do, right? So if a firm has like a bunch of positive delta, they would need negative delta. How do you get negative delta? By shorting stock. By the way, market making firms, okay, are bona fide hedgers. They can short as much stock as they want. There is no easy to borrow, hard to borrow, none to borrow. They don't care. It's a market making firm. They can short stock into the oblivion. Nevertheless, you don't see any of that activity being generated here. And that's actually one of the key takeaways from this evening's video. If we're asking the question, is big tech beginning to break? I would believe that I would see something inside of the option order flow. And I look at the traded at the ask or above, traded at the bid or below. Look, I helped build a lot of this feature right here on the Thinkorswim platform. And, been looking at it basically since inception. It's been, 12, 13 years since we actually built this little feature in here. I see nothing inside of the order flow. Now, there is one unusual thing. This has been around for a couple of days, but there is a heavy inverted implied volatility skew. So effectively, what that implies is that risk is actually to the upside. Yeah, newsflash over here. Like it's really like if you're buying calls right now inside of Nvidia, how hard is it to make money? Because even though the average implied volatility is about 57%, and again, I want to be very clear about that. Somewhere in the neighborhood of the average implied volatility is about 57%. Right, that's the average vol. The at the money implied volatility is closer to about 54%. But as you go further out of the money, the vol actually jumps to almost 60%. So go figure. There is no go figure. That's just, look, this is expensive. It's really hard to make money off calls in here because what's going to happen is as the stock rallies, your implied volatility is actually going to drop. Okay, you're slipping down the skew ladder. What I'm basically implying is even if you buy, okay, a 61 volatility. I don't care about the price. Doesn't matter. It's $1. You buy a 61 vol. If the market rallies, you're actually going to slip down the vol skew. Okay, you might not make anything because again, it's futility. You're gonna have a massive move to be able to make a couple of bucks inside of Nvidia. But that does not necessarily dictate or designate that it's over. So I looked through a couple of other underlyings, and I want you guys to know exactly what I'm looking at over here. So I cruised into Tesla. Why did I cruise into Tesla? I don't know. It's Tesla, right? Look, the option order flow, if anything, it's light and fluffy out there, people. Light and fluffy because the call sizzle and the put sizzle are actually doing less volume today than they have in the previous 5 trading sessions, all right? I looked into Meta, all right? So I look into Meta. Why? It's had some squeezes in there before. All right, so Meta is trading, okay, a little bit more put activity than it has normal versus calls. Calls is only doing about 70% of the norm. Okay, onward and upward. So I'll jump over to Microsoft. In terms of Microsoft, do we see anything unusual in here whatsoever? Nope. Fairly light, maybe normal on the puts, a little bit lighter on the calls. It's just not a lot of call activity, which makes sense because it's not necessarily an up day. And last but definitely not least, we'll look specifically into Apple. Apple mildly, okay, mildly above the norm in terms of overall activity in here, but neither the puts nor the calls are actually showing any activity specifically. So to answer the question, is big tech beginning to break? If it is, it's not actually being dictated in the order flow. Cannot stress that enough. It is not being displayed inside of the order flow. All right, last thing I want to cover, of course, is the SPX, the mother of all products. What's important about the SPX is this week, okay, it's a shortened holiday week. We had Monday off, yada yada yada. Doesn't make a difference. You still are on an $80 expected move. So roughly speaking, it's like $79 and change. But you have 4 days, okay, and the $79 expected move. Now, the $79 expected move in large part, look, the debt ceiling, yada, 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 can go over a million things, but there's also a jobs number coming out on Friday. There's a lot of numbers coming out tomorrow morning, like big data drops are coming out. But it's all for nothing. I don't care what you think about the debt ceiling. It doesn't make a difference. It's going to go through. Everything's going to be fine. That's whatever. Maybe the jobs number is going to disappoint. Maybe it's not going to disappoint. Have you looked lately, okay, at the Fed funds, meaning the Fed fund futures, the probability, okay, the probability now of a rate hike has increased substantially over just the last day of trade over here. So again, it is all over the place in terms of the idea of rate hike versus not rate hike, which lends itself to the jobs number is going to be even more critical. Earlier today, there was as high as a 70% chance of a rate hike. That is actually abated a little bit. Nevertheless, okay, look at this. We're coming into the cash close here, and we got a rally on our hands. Nevertheless, okay, the big point to be made off of this expected move, again, it doesn't matter what you think about the debt ceiling, any of the data coming out. Bottom line is, okay, we're ready to rumble. Like, this is a really big move, and we've seen absolutely no movement thus far. So push everything aside. Doesn't matter about, the Fed. Doesn't matter about the debt ceiling. Doesn't matter what the data drop is going to be, okay? Because you're not going to be able to handicap the move. Again, we are not seeing anything specific to tech that says it's about to break. All we're seeing right now, big boy, expected move directly ahead of us, and only 2 trading days left. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.